Coming to you live from the brand new studios of Concenture Wealth Management right here in Houston, Texas, in the world headquarters. Hey, hope you all are having a great summer. We're right now, as I always say, in the dog days of summer with August coming along. And guess what? Just as we've been talking about, ever since January, we've started to experience volatility, with it really kind of starting to hit a feverish peak right about now. What's going on in the markets? What's been happening? Well, it's really interesting. Right now, we're in the middle of earnings season. The last few companies are coming through and announcing. But what's interesting about that, 75 to 80% of companies that have announced earnings have met or beat their earnings. But what's interesting is the way the markets have taken that. Generally speaking, the companies that have beaten their earnings are only up about 1%. But the companies that have missed are down about 3%. And some of these we've had really go through and really show huge swings in stock prices. As we're going through and looking at things, it's all about valuations, making sure that we have the portfolio set up the right way. You know, the biggest issue that we have right now with regard to companies and earnings is sales. Companies have been able to maintain their sales. Those that can control their bottom, those that control the cost have maintained their revenue. Those who have that costs have gone up, whether that be from commodities or labor costs, have really taken it in the form of revenue. And that's one of the things that we've been paying attention to. You know, we've had a tremendous amount of volatility here over the last week and a half, with Monday really showing a big number. Here's the deal. Making sure your portfolio is set up the right way, making sure that you have cash to meet your living expenses, and making sure you're being proactive. What's very interesting about, as we go through and we look at the economy, we go through and we look at what's happening with companies, we look at earnings, we look at what's happening in the geopolitical situation. I think it has people starting to be a little bit nervous about where we are and what's going on. People are being very selective about what they're spending money on. In fact, there was an article just out this morning that said that people are sacrificing other things that they're spending on for school supplies. We haven't seen articles like that in a while. Now, there started to be more and more talk. Are we in a recession? What has happened? Last week, you had the Fed meet. They left interest rates where they were. Then the very next day, we saw unemployment kick up. A couple of years ago, we started talking about unemployment and what the Fed wanted to have happen before they would start to cut interest rates, because they were going to continue to raise. And we said that they would want to see unemployment around 5%. We're currently at 4.3%. Now, some of that's seasonal. Some of those different things are kind of going on. We're paying a lot of attention to that. The biggest thing that I would tell people about whether or not we're in a recession is that we have been going through a period where we kind of have had industry-specific recessions, kind of these rolling recessions that have gone through, that's come and it's gone. It's come and it's gone. I think we're beyond that, and now we may end up getting closer to an overall type of recession. But I don't think we're there right now. I think there are signs that we need to be aware of. I don't think we're there right now. I don't think it's today, tomorrow, next week, next month. I think it could be 2, 3, 4, 5, 6 months from now, and that would be natural. The natural when it comes to the economy. We're seeing this rotation into value, dividend-paying stocks, and that's really helped bolster our portfolios. Even though they're down, they're not down near as much as what we've seen in the S&P 500, in the NASDAQ, and then the Dow, being broadly diversified. What's interesting is that bad economic news up until now has been seen as good for the market, meaning that the Federal Reserve would go and cut interest rates. But now, because the Federal Reserve didn't cut interest rates, what we're starting to see is bad news, because it's starting to indicate that the Fed may be a bit behind. Fully expect for the Federal Reserve to cut interest rates and the markets to act in anticipation of that in September, October, November timeframes. We expect for them to go to cut interest rates. They'll probably be a little bit more aggressive to start, because it does feel like they're a little bit behind the curves. Now, there's a lot of fear out there that doesn't mean that we need to be acting on that fear. Sometimes fear creates big opportunities, and we're paying attention for those opportunities, but we don't have that all clear sign. There is going to continue to be volatility. Generally people speak about October as the month you need to be really worried about. But if you go back and you look at the numbers, the reality is that where you need to be aware and be vigilant with your portfolio is really August till September, October timeframe. The good news is we've been calling for this, we've been expecting it, and the portfolios are positioned. We'll continue to maintain where that is. This does not mean that with times to sell, we make sure that we look for opportunities, and where it makes sense, we act. But the markets right here are showing us that we still have a lot more volatility ahead. We need to be prepared for that. And so as we go through and as we look at this, the one thing that does give us a little bit of comfort is knowing that there still is a tremendous amount of cash sitting on the sidelines. At some point, that cash is going to come back. We're dealing with a lot of political situations here in the United States, trying to figure out what all of that means. The reality is that it's about companies and it's about companies' earnings, making sure companies are continuing to pay their dividends, making sure that we're in high quality companies, and making sure that we have portfolios set up so that we can weather the storm, which is exactly where we are and where we will continue to be. I realize this is going to be a little bit nerve-wracking, but we're prepared. We've been expecting this. Have no fear that we're keeping our eyes on it. But if you ever have any sort of questions, want to review the portfolio, don't hesitate to reach out to us. There's a lot of things going on. We're staying on top of it. Please make sure you reach out to us, and we'll be reaching out to you. I just want to say thank you. Last thing. Starting in September, we're going to start releasing our podcast back out. Make sure you're paying attention. We'll send it out in our newsletters. But the name of the podcast is Wealth Strategies Unleashed with Concenture Wealth Management. We have a lot of really great up-to-date information. You can check us out on any of the places that you consume your podcasts, as well as on YouTube. Make sure you're checking that out. Just want to say thank you. Hope you have a great rest of the summer. Stay cool, because it sure is hot, and we will talk to you again soon.